Are you wondering how you can increase your trading results without changing your entire trading system? Well, in today's video, we're going to be looking at two simple mathematical formulas that will help you do just that. Hello and welcome. I'm Dean Miller from WealthTIP, where our tip for wealth is to trade, invest, and prosper. And if you're new to this channel, then go ahead and click the subscribe button as well as the notification bell. And that way we can remain in contact with you and continue adding value on your journey as we walk alongside you on your way to success. Now, last week was the first episode of our Secret to Consistent Returns trading series. And for those of you that may have missed it, I'll put a link in the description box below, or you can simply just click the link that will appear on this video and you'll be able to go straight through to last week's video. Now, in today's episode, however, we're going to be looking at two mathematical formulas that will allow us to accurately determine the average win and the average loss rate of our trading system. Now, what this information will reveal about your trading system is that the average profit amount and the average loss amount in a monetary value. Now, in turn, this will act as a baseline for your profit target and the total risk you take per trade. Essentially, by identifying the average win and loss rate, you'll be able to determine the exact monetary value of an average winning trade and the expected value of an average losing trade. So with all that being said, let's go straight into the formulas. Okay, so we're going to be looking at the average win rate formula first. And this is a very simple formula to calculate. All you'll have to do is take the sum of all the winning trades divided by the number of winning trades. So let's go have a look at an example. So over here we have Tom. Now, Tom has been trading for about 3 years and started trading with a $5,000 trading account. And Tom is thinking of investing a little bit more money into his trading account, but before making such a commitment, he would like to first know what his average win and average loss rate is. Now, Tom has been using a strategy that has been winning him around 20% of his trades. Now, this means that on average, he has a 80% loss rate. Now, at this point, you may be tempted to believe that Tom should take all of his money out of his trading account and do something else instead of considering putting more money in. However, Tom has consistently closed each year on 30% return on investment, despite having such a low win rate. So how is this possible? Well, the answer is really very simple. You see, there is a stark difference between a win rate and an average win rate. For example, if you want to know more about a win rate and a loss rate and how to calculate it, then you can check out our episode 1 of this series. But essentially, this is the mistake that a lot of new traders tend to make. They tend to focus a lot on the win and loss rate and neglect to identify the importance of the average win and loss rate. So in many times, their eyes would light up when they hear of a strategy that has a 90% win rate, only to find that the average win rate of the strategy is way off. So to explain this in another way, let's get back to Tom. So if we were to use this formula, then it would be easy to use the figures from our last video. Now, let's say Tom took a total of 20 trades per year. And he's been trading for about 3 years, so evidently he's took a total of 60 trades, right? Now, according to his win rate, he only wins 20% of the time, and 20% of 60 is 12 trades, and this means that out of 60 trades, he's only won 12. So if we were to put these figures into the formula, then it would be the sum of all the winning trades divided by the number of winning trades. Now, the total sum of Tom's winning trades are $7,162.86, or sorry, 68 cents. And this total is the 30% annual return compounded over a 3-year period. On an initial investment of $5,000. Now, we take that figure and we divide it by 12, which is the total number of winning trades over a 3-year period, giving Tom an average win rate of $596.89 per trade. Now, obviously, this is not a very impressive figure, but what this does show you is that even with a win rate of 20%, Tom is still able to more than double his investment within a 3-year period. Now, let's calculate Tom's average loss rate. So here the formula concept remains the same, except instead of using the total sum of Tom's winnings divided by the total number of winning trades, we're simply just going to take the sum of Tom's losses divided by the total number of losing trades. So essentially, the total sum of Tom's losses can be calculated by subtracting the total profits from the initial investment, which will leave Tom with a total drawdown of $2,162.68. Now, we'll use this figure and we'll divide it by the number of losing trades, which is 48, and we'll end up with an average loss rate of $45.05. What this tells us is that although Tom loses 80% of the time, he's still able to make back the majority of his drawdowns in only a few trades. So essentially, Tom risks about $45 to make just under $600. And out of a simple sample size of 60 trades, he only has to win 12 of them, and he will have made back all that is lost with additional profit. Now, this is a prime example of the 80-20 principle in action, where 20% of your trades makes up 80% of your returns. This is the path most successful, consistent, and profitable traders would take, because they understand that success in trading requires a lot more than a strategy with a high win rate. It requires that you're able to win regardless of how many times you lose. So let your winning trades run, and I'll see you next week for episode 3 of Secrets to Consistent Returns.